Mortgage giant Mr. Cooper is sending notification letters to 14.7 million individuals to inform them that their personal information was compromised in a recent cyber attack. Security Week reports that the incident was identified first on October 31st, resulting in certain systems being taken down, including those that were used for processing customer payments, the company announced in early November. On December 15th, Mr. Cooper started notifying their customers that between October 30th and November 1st, the cyber attackers had access to certain systems and actually exfiltrated files that contained customers' personal information. Based on our investigation to date, roughly 14.7 million homeowners, representing former and current customers and co-borrowers, had personal information contained in the files that were affected by this incident, said the company in its incident notice to their clients. Also, the notification letter, which was sent to those impacted individuals, a copy, by the way, which was submitted to the Maine Attorney General's office, Mr. Cooper states that the compromised personal information includes these data points: names, addresses, dates of birth, phone numbers, and unfortunately Social Security numbers and bank account numbers. Now, on their website, the company clarifies that, quote, a limited group of approximately 32,000 reverse mortgage customers' bank account numbers were contained in the files that were affected by this incident. Mr. Cooper says it has fully restored their systems that were locked down following the attack, and that it is monitoring the dark web to see if any of the data that was stolen is being shared by attackers or sold on the dark web. The company also says it has no evidence at this time that the stolen information was misused for fraud or identity theft, but it is providing identity protection and also credit monitoring services to those that were impacted, and they encourage them to enroll in those services at no cost. Mr. Cooper has not provided specific details on the type of cyber attack that it suffered, but according to Security Week, taking systems offline is typically a response to a ransomware attack. To date, however, Security Week has not observed any ransomware gang taking responsibility for the incident. Reverse Mortgage Daily reports that the Mortgage Bankers Association, or MBA, is looking ahead at more potential reverse mortgage activity in 2024, according to a statement from Rob Brooksmith, its president and CEO. In speaking to Housing Wire on the topic of housing affordability, Brooksmith was asked about the potential for more activity in the reverse mortgage space after the establishment of a reverse mortgage working group earlier in 2023, and also their previous expressions of interest in the space in early 2022. Brooksmith said, "That's been an area of increasing focus for us. We just had a gathering of the reverse mortgage group, and they're very engaged, and we think there's a lot of good that can come from MBA being more engaged with that segment in the market." A long-standing discussion point for the reverse mortgage industry has been demographic trends and also the data that suggests that the senior cohort will need access to additional financial resources in retirement to make ends meet later in life, and Brooksmith does acknowledge those dynamics. I think that given the demographics of this country and given the record levels of home equity, it makes perfect sense for our members to focus on that product and to make sure it is as strong and sustainable, both for lenders and servicers, and of course, for the homeowners and their families as it can be. This means that the NBA is certainly looking to do more with reverse mortgages in 2024. Brooksmith explained, yes, the short answer is we will do more on that in 2024. And in fact, the working group met this week to try to focus on its priorities list. Refinements and new attention in the reverse mortgage space led to the working group's development in the Mortgage Bankers Association. That is according to David Coleman, president of the MBA subsidiary of the Mortgage Industry Standards Maintenance Organization, or MISMO. And that was after the Reverse Mortgage Working Group was established in April 2023. There is a renewed interest in the reverse mortgage space, and we are looking forward to convening industry professionals as part of MISMO's Reverse Mortgage Development Work Group, or DWG, to collaborate on this timely topic. The grain of the American workforce continues. Baby boomers are working longer and earning more than their predecessors did in what Americans typically think of as the retirement years, according to new research. Almost 20% of Americans aged 65 and older were employed this year, according to a new report from the Pew Research Center. And that's nearly double the share of those who were working just 35 years ago. In total, there are around 11 million Americans 65 and older who are working today, comprising 7% of all wages and salaries that are paid by U.S. employers. In 1987, they made up just 2%. Now, though the trend has picked up in recent years, save for the exodus of older workers during the COVID-19 pandemic, it has actually been underway for several decades, that according to the Minneapolis Federal Reserve. While older workers did start retiring earlier after World War II, thanks to new generous government programs, the 1990s saw more of them working longer. There are a number of reasons for this change, and that's highlighted in Pew's report and other research. Among some of the largest changes that contributed to this is a much higher share of baby boomers who have four-year college degrees relative to the generations before them and were able to work white-collar, less physically taxing jobs. Also, baby boomer women were more likely to enter into the paid workforce than women in previous generations due to cultural changes. And also, advancements in healthcare have kept more Americans healthier for longer, and the strong job market of the past few years does make it easier to stick around and work a little bit longer rather than retire. Our sense of what is old has changed over the past 40 years, says Aaron Terrazas, chief economist at Glassdoor. And there are simply more baby boomers than there were in other generations, thus the name boomer. In 2023, the majority of boomers are at least 65 years or older, and retirement benefits such as pensions and defined contribution plans or 401ks have also changed substantially since the 1980s. Boomers with employer-provided health insurance do have an enticement to keep working, and while they are more likely than previous generations and also current younger generations to receive a pension, there are still many boomers who do not have a pension and contribute on their own to something such as a 401k or IRA, which does encourage people to work longer in order to save more. And there's another factor. The U.S. as a whole is aging very fast. There are many more older Americans than there were before. That means a higher share of the workforce will be older because a larger share of the population is, especially when compared to the 1980s. And last but not least, we bring you the monthly segment of Reverse Market Insights Market Minute with John McHugh, where we're going to learn what's been going on with HECM originations and also the trends we should be looking for. John, take it away.
Hello, Shannon, and thank you for having me back again. So last month, I gave a recap of the year through August with a little color into October, and my thoughts on where we would probably end up. The biggest reason for this year in review recap last month is because HUD had not been updating endorsement or case numbers for the past few months. Well, I'm happy to report that they have now updated the data completely through October, which would be their normal timeline. The bad, though, is that the numbers are not as cheery as you'd like them to be during this cheerful time of the holiday season, especially. I mentioned that I thought given the past endorsement trends of the industry and the trend we have been on this year, we'd most likely end up at just over 30,000 units. Well, when we take the full data through October and layer in the highlights of the November endorsements, we're at 28,497 endorsed loans. That means that we need to have just over 1,500 endorsements in December to break that 30,000 mark. With us trending around 2,500 a month and looking at case numbers assignments barring any real crazy things, we should expect to be able to hit that 30,000 for the year. We'll have to wait and see for the numbers to be final, but that's the prediction at this point at least. Now, if we turn our attention to case number assignments through October, which is a barometer for endorsements, we'll see case numbers issued have been mostly weaker since our last update, with July, September, and October all below June and August as the lone bright spot. October case numbers rose 3.8% from September, but then were down 11.5% from June to 3,363. Equity takeout cases issued were down 4.8% from June, but up 3.5% from September at 2,933. Purchase dropped 31.3% from June and dropped another 2.9% from September to land at 167 as the rise in rates and seasonal weakness took their toll. And then finally, HECM refinance case numbers fell even faster as would be expected given the expected rate increases, down 44.6% from June to only 263 case numbers. With 2023 nearly in the rearview mirror, we turn our attention to 2024 and hopefully we all get the same thing for our present this year in the form of some relief in the rates. With that being said, I'd like to wish everyone a happy holiday season and even more importantly, a prosperous new year. Tune in next month to see where the industry landed for 2023, and I want to thank all of you listening for the dedication and hard work you put into this industry. Thank you.
And that's a wrap for us here at HECMWorld Weekly, our video edition. Thank you so much for joining us, and also be sure to subscribe to our YouTube channel. That way you never miss an upcoming episode. And be sure to return every Monday so we can bring you the reverse mortgage news that we curate here at HECMWorld just for you. Have a great week.